analyst desk here at Genscape, and I'm just going to jump right into it. So today we're going to go over a recap of fall 2013, take a look at the weather. We're going to have a look at the wind, generation, congestion, and then we're going to sum it all up. So September, we obviously had a strong start to September, much warmer than normal, particularly in northeast Texas, and really a wetter in eastern Texas and a drier far west. Peak load of the month was 63.4. It was on the very first on-peak day of the month, September 3rd, and it was due to obviously a strong cooling load with the heat. As you can see, the blue dotted line is peak demand over the course of the month. It correlates with the right axis. You have the real-time on-peak average in the green line, and then you have the red line is going to be your day-ahead market on-peak average for the month of September. As you can see, September 3rd, we had numerous prints at almost $5,000. There were 3 prints there. Basically, we had very low wind, very strong demand. It was the first on-peak day of the month, and we actually had 2 600-megawatt unit trips right at the peak hour, one falling after the other, and with 1,200 megawatts coming offline, we saw essentially the price cap hit. For the rest of the month, demand came down, and we saw more, smaller but positive dart spreads throughout most of the month, with the occasional spike here and there. But for the most part, after that, the rest of the month was mostly day ahead over real time. In October, we were pretty much warmer in the south and a little more precipitation basically in the center. Monthly peak was 54.7, also driven by strong cooling load. Once again, first day of the month, we had a price spike with the on-peak average clearing $196 for real-time North Hub. Obviously, the day ahead cleared $33, so there's a strong negative dart spread there. Basically, what happened was we had an SCP unit come down, a large nuke. 2 coal units entered mothball status the previous night before, and basically we just had a lot of units in outage that day. And there was an OCN for capacity shortage issued for 15 to 18, and we also had and basically with low wind, about 3,000 megawatts at the peak, we were well under committed, and we saw that real-time price spike. The following day, obviously, had a much stronger dam clear, and October 3rd, we also had $54. With the higher load, generation was able to be committed for that. And then we saw another couple spikes later on in the month, and once again, similar to September, the overall average, if you tallied it up, October also had a negative dart spread where the real time cleared, about $6 above the day ahead market for the on-peak average Monday through Friday, 7 to 22. November, we were expecting it to be a little bit above normal on precipitation. It didn't turn out that way, and overall, it was a little bit cooler than normal. The monthly peak was about 46.9, and it's driven by strong heating load. Once again, there was another, one day. If you look on November 22nd, we had freezing temperatures, sleet and rain. We had demand come in about 3 gigawatts above forecast for the peak hours of the day, which are 17 to 19. Wind actually fell well under forecast. I think we had almost 4 gigawatts less wind generation than we had expected, and I think a lot of that was due to icing buildup on some of those wind turbines and caused less output on the wind. And we already had kind of a thin surplus capacity during that day, and we also had a 500 megawatt frequency event. We had a unit trip that drove the 5-minute real-time prices to about $1,300 and then $3,500 for for a total of 3 prints, well over $1,000 during the peak hour, and that drove the $110 clear. And once again, there was for the entire month of November, there was a slight real-time premium over the day-ahead market by about 50 cents on average for the month. So I mean, overall, it was a little bit wetter than normal for the fall, and there was no real significant departure from seasonal conditions. That's over the course of 3 months. Obviously, September was warmer than expected, and you had a little bit cooler October and a seasonal November. So you had some strong monthly peak demand in those ones. So this is the last 5 winters, departure from normal for the last 30 years. You can see that 2008 and 9 was warmer, 2011 12 was warmer, while the other years were cooler than normal for the most part, with 2012 also being a little bit warmer as well. This essentially shows the same thing. You can see that peak load with the climatology that we're seeing. With the winters of 09 to 10 and 10 to 11, we had 56 and 57 gigs of load. That was the cold climatology, whereas the warmer climatology was 47 for peak load and 11 and 12, and last year was a little bit warmer, so we only had just over 50 gigs for peak load. The winter peak demand essentially can occur in any of the winter months with little tie to actual climatology. That's just, as you can see, we had some occur in February, some in December, and some in January. Obviously, this is kind of self-explanatory, but the main driver of strong demand in the winter is heating load. A good proxy for that is being the low temperature, usually occurring prior to sunrise. A morning peak demand. Daytime high temperature is less correlated. As it gets higher, it'll be weaker. But as cold builds overnight, if you have prolonged cold, like we've kind of been seeing actually recently, the peaks get progressively higher. For 2010 and 2011, back in 2011, the peak load was on February 10th, and it was over 57 gigs. February 2nd would have been nearly 59 gigawatts instead of 52 to 53 in the morning, had we not had the load curtailment, and I'll show you a graphic right after this. So this was taken from the Independent Market Monitor report by Potomac Economics. It clearly shows that if you actually follow the load, had there not been load shedding, it would have reached nearly 59 gigawatts, which would have been which would be their record. So overall, the forecast leans a little bit seasonal this winter. Northern half of Texas more susceptible to a colder bias, and the southern half of Texas more susceptible to a warmer bias. It's obviously coldest December through January, with a milder February expected this year. It's definitely going to be compared with the previous 5 years, this winter is going to be colder than the 3 warm years we've seen, but slightly milder than the other 2 winters that we've listed out here. Given the coldest years were 56, 57 gigs for peak load, warmest was 47 to 50. We're thinking around a 55 gigawatt load for this winter season, and it's likely going to verify in December or January rather than February. So December, we're going to be near seasonal over the month, but given the first week and the first half of the month really was much colder than seasonal. We've seen strong peaks over 50 gigawatts already, and we've seen 53.8 on December 10th, powering 8, and that I believe is a load record for December. As we head into mid-December and head into next week, we're going to have some milder temperatures, and load's going to be coming down. However, looking forward, a colder spell is actually going to come in over the weekend before Christmas, the 21st, 22nd, and it's going to get very cold that week, and we could actually maybe challenge that monthly peak during the week of Christmas with that colder weather. So for January, we're definitely expecting it to be colder than last January, and similar to 2010 and 11, with some cold air moving in. These years that we're talking about, whereas between 50, basically between 51 and 56 gigawatts, we're likely going to see demand in the 53 to 55 gigawatt range during January. February, we do expect an above normal February in Texas, 1 to 2 degrees above normal. This is definitely going to reduce the opportunities for heating load, and we're going to have more comfortable temperatures and plenty of shoulder season days. So, the warmer Februarys of the past 5 years were 2009 and 2013. They had demand peaks of 40 to 41. Given that this February is going to be warmer, we're expecting it to also be in the 40 to 41 range. So wind. Wind in the winter months is actually pretty volatile. However, it is the second most active season with about a 31% capacity factor on average. And as you can see, the wind really doesn't change in terms of capacity factor from month to month like it does during some of the other seasons. They're very close in terms of capacity factor. These are the last 3 years in capacity factor for the 3 months. You can see that January has a dip down here during the 18-19 hours. And then February has stronger wind throughout the midday in general on average. And a lot of times what you'll see in the winter months is you'll have a cold storm moving through. You'll have very weak wind followed by extremely strong wind. So actually a good example would be today. We have very low wind. The wind through tomorrow. In general, the winter season, sea breeze, coastal wind down in the south on the southern coast, it's going to be suppressed down the south, especially in January. We have very weak south wind. What to expect for this winter? We've seen more wind over the last 2 winters, basically due to just increased capacity, and as more and more CREZ lines come in, there's less bearish congestion to the west, and the grid is able to handle more of this wind. So in terms of capacity factor, we're probably going to see the same, and if we see more wind in general, it's going to be due to the increased nameplate capacity of the region. Generation. This is taken from ERCOT's final seasonal assessment of resource adequacy. You can find it on the ERCOT website. But essentially, if you go through the installed capacity, add in the pumps, switchable units, the percentage from wind, there's more than enough reserve capacity for this winter. Typical maintenance outages are your risk. It's about 1,600 megs for the peak hours, and then 4,000 megawatts for forced outages during this time of year. With that, still there's 68 gigs of generation that is available for this winter. Obviously, not all of it will run every day. Prices have to be there in order for this generation to actually be online. So, but as we've seen this past week, there is a lot of generation available. As we progress further into December and January, more units will be coming back from outage, and the capacity will be there if the demand is forecasted correctly and there's enough lead time to get all the generation online. As far as mothball, December 14th is another 800 megawatt coal unit going into mothball. It's an extra unit. Compared to last year. There's a little bit more coal generation in mothball this year than the previous years. But as far as changes from last year and the fall. That's really the only major change in terms of mothball. As far as congestion goes, there's still some bullish and bearish risks. Obviously, during the periods of highest and lowest wind, there have been some outages done out in the far west. I think the Odessa to Odessa North line was reconductored. That was supposed to be in the plan according to a presentation ERCOT gave to Encore as an update on the West Texas congestion back in May of this year. That line that was supposed to be reconductored went out for a number of weeks in October, and since it has returned, we haven't really seen much of the bullish west congestion in the Odessa area. So it's possible until we start seeing some higher lows, we may not get really a lot of the bullish west load zone congestion that we've been seeing. However, there's a few outages out in the west there that with high wind, and you'll see some bearish congestion there. Also with a couple low wind days and some of these other outages, you may see a little bit of bullish congestion, but overall we're seeing a lot less west congestion this winter than we have in previous winters. And especially with the addition of a lot of the CREZ lines, we're not really seeing west-north congestion anymore. We haven't seen that for quite a while. In the south, it's been very active recently. There's a lot of lines going out down into the valley. There's a lot of lines out in the Corpus Christi area. Typically, as we head into January, with these 345s going out, if you have low south wind and units offline the valley, you'll have some bullish congestion there, and vice versa. If there happens to be a day where there's strong south wind generation, you could see the opposite effect where power struggles to get out of the valley. So it's very important to look at the wind down in that area at hub height level, and overall, I think because January and February typically have the lowest south wind months, I'd say overall with most of the outages, it's probably bullish south load zone, and Corpus Christi I think is probably still going to be bearish for this winter. Houston, there aren't too many line outages in Houston this winter. There's a couple major 345s that are going out, but with the north in general being very strong, and you have lower wind, in general, you have a couple days where over the afternoon during the lowest demand hours in the north, you could have some bullish Houston hub and bearish north hub congestion. But only on the days really with the outages. You really need a lot of gen online in the north and low load, and the gen won't come online unless you have some high demand there. So in general, the fall was much more volatile with all the units in outage and the extra units that were mothballed. For all 3 months of the fall, September, October, November, the real time cleared above the day ahead for the on-peak average. So we had negative dart spreads in those months. Winter peak demand can occur in any of the 3 months. Most likely this year it's going to be December or January. Peak demand so far is 53.8 on the 10th. It's a December record. Late December or in January we could see up to 55 gigawatts. Winter wind is volatile as the cold and storm fronts pass through. You'll have periods of strong wind generation followed by very weak generation, and then it'll just go to very strong and very weak, and vice versa. Outages in the valley continue into January and February. You're going to have bearish self-load zone congestion risk as a result of these with high wind, and bullish congestion risk with strong load and low wind generation there. We have slightly more base load generation in mothball status this year, and as we've seen, I think after 2011, I think there's been much more preparation out there in the market. I don't think a lot of the generation owners are really going to be. I think they're we've seen in the past week or so, they've been very prepared. We really haven't had any unit trips or anything of that nature during that time. All the units have been functional. They've been running. As we head further into December, all the units that are in outage have been slowly coming back out of outage after outage season. And I think as a result of that, as a lot of those base load units come back, we're going to see less real-time volatility this winter. And if you have any questions, feel free to ask. You can type them into the little chat box on the bottom right-hand corner. So I got one question. Will we be emailing out the slides? Yes. I will send an email with the slides. And also at the very end, after we close out here, if you wouldn't mind taking a survey at the very end, it'll help us to improve our webinars going forward. So I have another question. How many megawatts are in mothball? I don't know exactly offhand. I know that because prior years there have been generation going into mothball that haven't come out. But I guess what I can say is that there's probably going to be about 800 to 1,000 megawatts more generation in mothball this year than prior years, than prior winters. All right, and I think that's all we have. So once again, I want to thank you guys for attending the Genscape Winter Outlook, and hope you guys have a great day. Thanks.